Can a mid-sized player like South Indian Bank really beat industry giants HDFC and ICICI? It's a bold question, and your first thought might be that it's impossible. But in this video, we are going to deep dive into the exact reasons why it could happen. We will explore the specific strategies, the technological edge, and the attractive valuation that makes South Indian Bank a potential challenger to the big players. So if you're wondering why you should even bother looking beyond the established leaders, stick around. We are going to analyze whether South Indian Bank has what it takes to challenge the giants and what that could mean for investors looking for the next big opportunity in the banking sector. Just like we discussed with gold, where everyone thought it was just a safe haven and then it gave exceptional returns, sometimes you need to look beyond the obvious. Sometimes the real alpha is found in places people aren't paying enough attention to. So in this video, we'll break apart the investment thesis for South Indian Bank and give you a perspective on whether or not you should be considering it. And frankly, whether it's a stock worth considering for a specific part of a portfolio. We'll break that topic apart for you. First things first, let's understand the landscape. The Indian banking sector is massive and it's dominated by a few large players. HDFC Bank, ICICI Bank, these names are synonymous with stability and growth. But what if a smaller, more agile player has been quietly building a foundation that allows it to punch above its weight? This is exactly what seems to be happening with South Indian Bank. Now, let's talk strategy. Every successful company, especially in a competitive sector like banking, needs a clear roadmap. What's noticeable with South Indian Bank is a very focused, very aggressive push towards digital transformation. This isn't just about having an app. Many banks have apps, but their approach is comprehensive, focusing on both the customer experience and, critically, operational excellence. They're leveraging technology not just to look good, but to genuinely enhance customer interactions and improve their back-end efficiency. For example, their flagship SIB Mirror Plus app. Now, this isn't just a basic banking app. It offers a range of services, including instant account opening and even international transfers. This puts them directly in competition with the digital offerings of much larger banks. This is a strong contender in the digital banking space. They also employ something they call a three-pillar strategy: indulge, nudge, and purge. Now, this sounds a bit fancy, but what it essentially means is they're actively working to get more customers onto their digital platforms, and it's working. This strategy has led to a whopping 98% of their transactions being conducted digitally. That's a massive number, right? This shows a serious commitment to seamless and secure banking experiences. And when you have 98% digital transactions, what does that tell you? It tells you about efficiency, it tells you about cost savings, it tells you about scalability. This is the kind of stuff that can really move the needle for a bank. Beyond just digital adoption, their customer-centric approach is also very interesting. They're introducing innovative services like Aadhaar-based mobility solutions for their staff. This means their field agents can serve customers more effectively right at their doorstep using Aadhaar for verification. And for their high net worth individuals, they have a Visa signature card. These might seem like small things, but they show a bank that's thinking about specific customer segments and tailoring solutions rather than just a one-size-fits-all approach. So, okay, that's the strategy. Now let's talk about the technological advancements that underpin all this. Because strategy without execution, without the right tech, is just a wish list. Their digital channels have seen a significant increase in transaction volume. Mobile and internet banking now account for a substantial portion of their overall transactions. This shift isn't just about convenience. It directly leads to operational efficiencies. Less reliance on physical branches for routine transactions, lower overheads, and a faster, more agile service delivery. This is a crucial point that many people might miss. And it's not just in-house tech. They're also smart about fintech partnerships. They collaborate with fintech companies to leverage advanced technologies like AI and machine learning. Now, why would a bank do this? Primarily for underwriting and fraud detection. This enhances their risk management capabilities dramatically. In banking, risk management is paramount. If you can use AI to make better lending decisions and detect fraud faster, you're not just saving money, you're protecting your balance sheet and building a more resilient business. This is a sophisticated approach, not something you typically expect from a bank of its size.
And of course, in today's digital world, cybersecurity is non-negotiable. South Indian Bank has been strengthening its cybersecurity measures to ensure customer data safety. This is crucial because no matter how innovative your digital offerings are, if customers don't trust the security, it all falls apart. So, they're clearly investing in this critical area.
Now let's move to market positioning. This is where it gets really interesting, especially for investors. Because sometimes a great story isn't enough if the price isn't right. So first and foremost, their valuation. If you take a look at the data points, South Indian Bank's valuation is considered very attractive. We are talking about a PE ratio of around 5.7 to 5.8 and a price to book value of 0.75. Now, if you compare that to the likes of HDFC Bank with a PE ratio around 20 and a price to book over 2.7, or ICICI Bank with a PE of over 18 and a price to book near 3, South Indian Bank looks undervalued. It's trading at a significant discount, right? This is a key piece of data you need to keep in mind.
And it's not just about being cheap. They also offer a dividend yield of around 1.35% and an ROE, return on equity, that has been tracking around 13%. These are competitive metrics. For a bank that's undervalued, showing a decent dividend yield and a solid ROE, that's a compelling combination. It means the business is generating returns for shareholders and there's potential for capital appreciation as the market starts to recognize its value. What about recent performance? For the financial year ending in March 2025, the bank has shown growth in advances and deposits. This isn't some short-term fluke. This indicates robust market performance and suggests that the market is beginning to notice the fundamental changes happening within the bank. So on a one-year basis, it has done exceptionally well. It has beaten the broader market. But if we extend the timeline, the story gets even better.
Let's talk about competitive advantage. What truly sets them apart and gives them the edge? Number 1, their regional focus. South Indian Bank has a strong, deep-rooted presence in southern India. Now, many might see this as a limitation. Oh, it's just a regional bank. But think about it logically. This regional strength allows them to capitalize on local market opportunities. They understand the local economy, the local customer base, and can offer more personalized services. This can translate into stronger customer loyalty and better credit quality within their established region. It's not about being everywhere, it's about being dominant where you are. Secondly, their operational efficiency, which we touched upon earlier. By leveraging technology, the bank has significantly improved its operational efficiency. This means reducing the reliance on extensive branch networks for basic transactions and, as a result, enhancing customer convenience through digital channels. This is the cost-effective model for growth. In a world where physical branches are expensive to maintain, a digital-first approach means more profits drop to the bottom line. And finally, their innovative products. The introduction of things like the SIB Mirror Plus app and enhanced UPI features position the bank as a leader in digital banking solutions, not just among its peers, but even when compared to some larger players. They're not just following, they're innovating. So, long story short, South Indian Bank's unique strategies, technological advancements, and market positioning provide a strong foundation. This could allow it to potentially outperform larger banks like HDFC and ICICI. Its focus on digital transformation, customer centricity, and operational excellence, combined with its attractive valuation and robust market performance, make it an interesting investment opportunity for investors looking for growth in the banking sector.
Now, for our natural question, will South Indian Bank keep on rising and can it truly beat the giants? In order to understand this question, you need to first ask why these changes have happened in the first place. It's a strategic shift, a pivot towards a more modern, efficient banking model. This isn't a one-off event. This is a sustained effort. But you might be thinking, okay, that's great, but HDFC and ICICI are also doing digital, right? They have massive resources. And you are absolutely right, they do. But sometimes a smaller, more focused player can be more agile, can implement changes faster, and can capture market share in specific niches before the giants can fully react. It's like a speedboat versus an aircraft carrier. Both are powerful, but one can turn on a dime. So this is the investment thesis for South Indian Bank. But what type of investors should be looking at a bank like this? First and foremost, let's divide investors into a few classes. Number 1, value investors. For someone who looks for undervalued assets with strong fundamentals and growth potential, then South Indian Bank, with its low PE and price-to-book ratios, could be very attractive. It's trading at a discount compared to its intrinsic value, especially considering its digital push and efficiency gains. A second category of investors would be people who are looking for regional plays and digital disruptors. If you believe in the power of focused regional banking, combined with aggressive digital adoption, then SIB fits that bill perfectly. They have a strong hold in the south, and they're using digital to expand their reach and services without the massive overheads of traditional expansion. And then there are pure growth investors. Now, many might be looking at the Sensex returns and questioning the point of looking at a smaller bank. You might be right and you might be wrong. Why? Because you have to understand that growth isn't always about being the biggest. Sometimes it's about the percentage growth from a smaller base. And South Indian Bank, from its current base, has a lot more room to grow, percentage-wise, than a behemoth like HDFC or ICICI. Now, this does not mean that the markets will not do a 20% drawdown or something like that. That can always happen. But generally speaking, companies that are executing well on a clear strategy like SIB is doing with its digital transformation are likely to do well going forward.
This brings up the topic of capital rotation. For example, an investor might see South Indian Bank in a consolidation phase. If some of their technical stocks have reached high valuations, an investor might decide to pull some profits and rotate that capital into a promising value play like South Indian Bank. This concept of capital rotation is a big challenge for investors who are just stuck in one asset class. Diversification is key. One shouldn't just stick to large cap banks if potential is seen in other places. Because even when a large bank is at an all-time high, it's a struggle to book profits and move that money elsewhere without a diversified portfolio. This is a prime challenge that people do not always understand or appreciate. A bank like South Indian Bank could be a place to rotate that capital. It may or may not work out, but it's something that can be studied.
Now, let's quickly talk about potential growth triggers for South Indian Bank in the coming years. What could make it truly beat the HDFC and ICICI of the world? Number 1. Continue digital adoption. If they can maintain that 98% digital transaction rate and even push it higher while expanding their digital product suite, that's a massive lever for efficiency and customer acquisition. Number 2. Expansion beyond its core regional base, but strategically. This doesn't mean opening thousands of branches nationwide, but perhaps using its digital prowess to attract customers from other regions who are looking for competitive digital banking solutions. Number 3. A favorable regulatory environment for smaller, agile banks. If the government and RBI continue to encourage digital inclusion and support smaller players, SIB could benefit disproportionately. Now, of course, there are risks. Every investment has risks. Number 1. Competition. HDFC and ICICI are not standing still. They have massive resources and will continue to innovate. South Indian Bank needs to stay ahead of the curve. Number 2. Scaling issues. As they grow, can they maintain the same level of agility and customer focus? Number 3. Credit quality. Like any bank, they're exposed to credit risk. Any significant downturn in the regional economy could impact their asset quality.
But long story short, if they continue on this trajectory, if they keep executing on their digital strategy and leveraging their regional strengths, then there could be a significant upside. So this is the investment thesis for South Indian Bank. Even for investors who are primarily focused on growth and tech, understanding the importance of diversification and finding value is key. If you look at banks that have successfully transformed digitally from a smaller base, the returns can be amazing. So here's the scenario. South Indian Bank's current trajectory, its valuation, and its aggressive digital push make it a compelling story. On a medium to long-term basis, this equation could favor South Indian Bank more aggressively than some of the established giants, purely from a growth percentage perspective. To summarize, South Indian Bank has done exceptionally well in its transformation. If you are an investor looking for value, growth, and a strong digital play in the banking sector, don't get excited by just the big names. Time your entry, look at the fundamentals, and consider South Indian Bank as a potential outperformer for a portfolio. I hope that you enjoyed this video. If you did, do press the like button, and I'll see you soon.